today's webinar program, Automated Supplier Statement Reconciliation Yields Dramatic Results, brought to you by the Accounts Payable Network and sponsored by StatementMatching.com. My name is Laura Hummel, and I'll be your moderator for today's program. I would like to introduce our speakers for today, David Hay and Daniel Kimpton. David Hay retired from a 40-year career spanning international banking, finance, and computer services and outsourcing. Recently, David served as Director of Shared Services, Business Services Outsourcing for Hewlett-Packard. David consults on payment best practices and is a regular speaker at Accounts Payable and payment conferences and a member of the Tappan Advisory Board. Daniel Kimpton has been delivering process improvement and automation projects for 10 years and has a wealth of experience working with Accounts Payable. StatementMatching.com is just one of the tools Daniel has at his disposal to help customers achieve real efficiencies and improvements. At this time, I would like to hand the presentation off to David.
And thank you very much for joining this webinar. This will be an informative session. Agenda is I'm going to talk a little bit about the current state of AP, look at AP as a profit center, go detail on statement processing. Then I will hand it off to Daniel, who will go into that process in a little more depth. The word accounts payable has changed dramatically over the last few years. We've increased regulation in the post-Enron years. Increased workload as companies outsource more and more non-essential functions, including the number of vendors managed. Many companies today are virtual companies with even the manufacturing outsourced. This increased greatly the number of transactions and the volume of cash flowing out through AP. Asian markets have not been good, and there's been increased scrutiny by cash-strapped state and local governments in areas such as escheatment, sales, and use tax. They're becoming much more aggressive, and it's up to the company to prove that they've complied, not the states. And, of course, there are tremendous cost pressures and a lack of capital for development, especially in internal functions. Every 6 months, the CFO magazine goes out and surveys the CFOs. Annually, there's about 5 top in each class. About the economy, the concern, of course, is consumer demand. That's the biggest driver in most economies. All federal government policies, price pressure, particularly from other, offshore. When their own companies, their number one is their ability to maintain margins, ability to forecast results, and working capital management. AP has its own set of goals, and when we combine these goals, we need to do some process change. And the critical thing is purchasing an AP must work as one team. And centralize AP, all invoices go to a central site, etc. Automation side, automation gives improved visibility, maintenance through spend analysis, discount capture, and statement matching. You're replacing the process, manual process, and of course, you'll be on-time payments. By Tappan, done every year on AP, that the goals of AP in many ways match, but not quite that of the CFO. This thing in AP is improving process and reducing errors by automating the manual processes. Surveyed these companies, they asked them their level of automation, and only about 15% of companies believe they have a high level of automation. The result is, for most companies, they've automated part of the system. They may have a workflow engine, they may do some e-invoicing, but they have not brought it all together and get the best benefits. Okay, so how do we AP into a profit center. Well, once move to share service or centralize, to automate the complete purchase to pay cycle. Now let's look at ways of offsetting costs. And capture, spend analysis, and statement reconciliation can get money that meets the bottom line requirements of the CFO. So let's look a little bit at automating statement reconciliations. 1, require statements from all suppliers. You can do it monthly for very active accounts, or quarterly, or annually for less active accounts. I helped my son run his small business, and I was ordering some gay material from this company. I ordered it. He said, "Oh, boy, do you realize you have a $271 credit on the books for some stuff returned a year ago?" Nope, I had no idea that was out there. And it makes me wonder what other credits we've missed by not paying attention. Missed credits come from a number of sources. Short shipments noticed after match and pay. Many companies today to the one extreme of a Wi-Fi connection to a complete container of goods that's booked into receiving. The goods are not unpacked or looked at until days later, and in many cases the three-way match has already been done, the goods paid for, and the shortages come up. So with goods returned, either defective or warranty returns, which was the case with me, is for meeting goals. For example, 3% credit for exceeding quarterly buying goal. This is one that one of my suppliers, a large sales supplier, gives us, and we've got to track it, and then when we order goods, we have to make sure we use it. Also, you get advertising credits, rebates, so they come from many areas. Another key reason to request statements is missing invoices. Short paid, not reflected in the vendor's AR system. You may have outstanding debt there because not correct the original invoice. So it means that you can avoid treatment, because if you have money that's out there, the company may turn that money over to the state through a treatment. Reconciliation. This is an incredibly time-consuming process, with the result that it is not necessarily done for all vendors. We were doing the same. We only did our high-level vendors, hence we lose from the low-level. Customer service costs for both AP and vendor AR, checking down missing invoices, missing details, etc. Let it automating it. 100% of statements can be reconciled. That's critical. All credits can be captured and applied. Also, outstanding invoices are highlighted. You've received the invoice that's on the statement. Meet audit and reporting requirements. Eliminate treatment. This is a critical one. And it cuts costs. And very importantly, it improves vendor relationships. Okay, when you're looking to automate, the thing is to accept input in any format, whether it's paper, PDF, or electronic. By the missing documents, whether they be invoices, credit notes, etc. By discrepancies, such as short pay. And get full reporting, reconciliation reports, and audit reports. This is the study, and although it is invoices, statements normally are in the same format the invoices is. Paper via email is now the fastest growing. Paper via mail, the via email is the fastest growing area. Then you have in the high volume industries the more traditional EDI, more and more EIPP, or electronic invoice delivery, used great now by utilities, etc. Then you have electronic flat files and other formats coming in. So it must be able to handle all of the methods that the statements come into you. What more and more companies are doing with this type of process is to consider outsourcing it to a specialized company. A number of reasons why they're doing this. One is rapid implementation. Critical thing for CFOs is no capital expense. You have access to the latest technology, and allows AP to focus on its core competency. Cloud. This is the fastest growing area of computing today. Even the federal government is moving more and more services to the cloud. Cloud in a variety of forms. There's public clouds available to all, minimum security, primarily things like social networking, Facebook, LinkedIn, etc., are public clouds. Secure access to applications via the internet with data aggregated by customer. This is critical. This is what the key players in the cloud, the software as a service industry, is set their clouds up. I would look at why cloud. Overall cost of IT infrastructure. This is from Aberdeen Group. 45% of companies are doing it. A competitive advantage, 31%. Flexibility of current infrastructure. People no longer have the IT resources that they did. And of course, it allows you to support additional users, services, or functions much more easily than doing it in-house. We are automating the statement process. The best are it maximizes credit note capture, and that's money that flows right to the bottom line. You have full, accurate reporting. The critical element today is improve vendor relations, eliminate achievement, and of course reduce costs over manual process. It helps AP meet its prime goals of reducing errors and meeting automation goals. Help CFO meet his margin and reporting goals. So this can be a win-win all around. Thank you, and I'd like to now turn this over to Daniel.
Thanks, David. My name is Daniel, and I work for StatementMatching.com. I'm going to give you an overview of how StatementMatching.com works, show you what it looks like from the user's perspective, and then talk about how you can interact with vendors via the tool. So before we get to how it works, let's look at what customers are usually looking to achieve with it. Pretty much all customers, they tell me they want to reconcile more statements, but they just don't have the time to do it in a manual process. And the reasons for doing it are pretty much the same every time. And Dave's gone through some of these already. The key ones are they want to make sure that they've got all of their documents so that the supplier balances are accurate for financial reporting, and they want to make 100% sure that they've got all of the credits. And reconciling statements gives AP another chance to spot duplicates. And in addition to that, some of the customers we've got using the tool, they're able to identify documents on the system that are unpaid but not quoted on the supplier statement, even though it's dated before the documents in the statement. And the more proactive customers that we've got, they see statement reconciliation as an opportunity to improve service to suppliers. You can send them copies of the reconciliations, and then you get the positive knock-on from that is less phone calls into AP from the suppliers. But ultimately, like David said on his summary, every AP department needs to have the best controls in place to ensure accurate liabilities are reported, and the more you capture, the happier the CFO is. So how does it work? Matching.com resides in the cloud. so there's software to install, no hardware, nothing like that to worry about. All we need is some data from your accounts payable ledgers, which gets uploaded into the tool automatically. We take paper, PDF and Excel statements, and I'll talk through how they get into the tool. And then everything's performed automatically. So the data is reconciled against the AP ledger data, and then all you need to do is log in to view the results. And the things that I'm going to show are how you can identify missing invoices and credits from the statement, identify documents that you've got in your accounting system that are not quoted on the statement, and then basically email vendors the results, request copies, and also produce comprehensive audit reports, which are for internal use rather than the vendor. So data requirements, we take, if you think about the amount of data that you get on a statement from the supplier, they're really only putting summary information on each of the lines. So your ERP system or systems, because lots of our customers have multiple ERP systems, we're just taking some simple invoice header data, which you can see on the left, and we're taking some information about the supplier, so just basic supplier name and address. Many of our customers that are using SAP and Oracle and some of the bigger ERP applications, they often have third-party invoice matching applications, and these are typically products that they use to match invoices before they get posted into the SAP system or Oracle, whatever it is. So take a download of the documents from there. So once that's set up, that's just output on a daily basis via FTP. And it's uploaded into statementmatching.com automatically. Really, from a setup perspective, that's all you need to do to use statementmatching.com. How you get ERP data in, how do we get statements into the system? There's two potential routes. The paper statements, you would scan and send them to email address that we give you, which would be custom@statementmatching.com. The PDF email attachments, you just forward the whole email on. You don't need to detach the PDF first or anything. You just forward the thing on to the same email address. And then our managed service that we provide, we extract the data and we put it into statementmatching.com, and that's part of the service. For files that you receive, so these could be Excel or text files or some other kind of electronic file format, there's a very simple import function on statementmatching.com, and part of the training when we do the setup is to teach you how to do the imports. So you look after the files, and we take responsibility for the paper and the PDF. So how does the matching process work? 99% of my customers are organisations, and they have multiple companies on ERP system. And they also have vendors which often have multiple accounts, and they will also invoice multiple companies. And typically they'll invoice the companies individually, but they'll often send you a statement with all of the documents on a single document. So the system takes into account the company and the system, and it will do cross-company matching and cross-system matching. And that we're using for matching are fields that you get on the statement, which are the invoice number, invoice date, amount, and currency. I've got linked vendors on the slide. If you've got more than one vendor account on your ERP system, you can link those vendors together on the system so that if you get a statement from one of the vendors in that group, it will actually try and match the documents across all of the vendors in that group, and it will tell you that it's done that. And the system does is give a status for each statement, an overall status, and I'm going to show you what they are, and then you get a status for each line, which is effectively for each invoice. And the system always uses the most recent statement for matching purposes. So as soon as a new statement in, any previously reconciled statements will still be available on the tool for audit purposes, but you're always using the latest statement. So what is it like for the user? So at this point, the data from your ERP system goes in the background. That generally goes in overnight. The supplier statements have gone in. and at this point you would be user, where you would go in and actually check the results. So the selection screen, and you can see on the left-hand side I've got some fields that I can select on, so I can look at statements for different companies, different sales, dates, and then you can see that I've got a bunch of statuses on the right, which are my overall statuses at the top. So I've got matched means it's found everything, there's mistakes. Matched with data mismatches, it's found all of the documents, but there'll be discrepancies in the data. So you can see below I've got somewhere the date's incorrect or the invoice number's incorrect. So they're kind of exceptions that you would want to go and look at. Paid items missing on statement. These are documents that are paid on your ERP system and they're not quoted on the statement, even though they're dated prior to the documents on the statement. I.e., if the vendor's not chasing it, then what's it doing on your system? Incomplete means that there is something missing, so an invoice or a credit that's missing, and then complete. Once you've reconciled a statement to your satisfaction, you set the document to complete, and then stays at that status. I'll explain what the system looks like. If you do a selection, it gives you a list of documents. Select one of those documents, it tells you what the details are. So these are the details of the reconciliation for this statement. So you've got statement data on the left, which has been captured from the statement, and you've got the ERP data on the right. So these are the invoices and credits that have been matched to. And bottom, these are the unpaid items that are not on the statement, and we've not got any in this box on this example. I have got one of these as an example. I'm going to look at three scenarios. There are obviously lots of scenarios which we often demonstrate to customers. For the webinar, I'm just going to focus on three. So one is unpaid item on the system which is missing from the statement. So if I go to my list, we're going to this one, Briggs equipment. So if you're in the red boxes, the invoices in the statement are between the 6th of March to the 5th of April, and they've all been matched. But then my ERP system, I've got a document down here which is unpaid, but it's the 25th of the 2nd, 25th of Feb. So, what's it doing on my system? And it's for £286.80, if you can see. And I've got one for I've got two for £286.80 on the system. So this is kind of a regular amount, and that, for me, would be a potential duplicate that I'd want to go and investigate. It's really helping you just find those exceptions and find them quickly. So, example 2, potential duplicate or keying error. So we got Mighty Security Incorporated. So this is incomplete. So if you look at this one, I've got two lines on the statements. One of them, the invoice number is incorrect, but if you look at the invoice number in red from the statement, it's just got a leading kind of, it's an S and a 1, but the actual number's kind of the same. So you'd probably update that and say, no, I'm happy to accept that. That is correct. But the document I've got that's missing on line 2, I've got another document here, which is the same date and the same invoice number, but amounts are different. This one's 234, and this one's 324. So that's probably a keying error. So again, it's just kind of helping you focus on where the exceptions are. So in credit, I've saved this one till last because I think out of everything, this is what people want to make sure, they want to make sure that they find. So an example of a missing credit, which is Fuel Link Systems Limited. So you can see this line is a credit for nearly $750. So what would you do? Most customers I speak to would they'd email the supplier to request a copy. What we've done on the tool is you click this email icon, and then it's a box, and the email address that you would send this from, this would be email address that you have set up in the system. And what most customers do is they'll have a generic accounts payable inbox, but you can set it to come from whatever email address you like. And if we take email addresses as part of the supplier data, it would default in here. and then you put your own subject in and your own message. But you can also put, you can put your own email address in there that if you want to send it to someone at the supplier. And what the supplier sees is an email which has got an attachment. We brand this up as the customer. So it's got your details on here, the vendor's details here, and you can basically send them a copy of the reconciliation. You're telling the vendor that all of these documents are matched, which means he doesn't have to ring you up about those. But when missing document, insert some text in here to say, send me a copy. And then recommend as best practice, because sometimes you can ask vendors to do things and they never do them. So recommend is you enter a note. If you've requested a credit from a vendor, you always enter a note. So there's a facility to enter a note on the website. And then in this example, you see with this vendor, I've already requested the credit in this last year, and I requested it again in January, and now we're in February. So I think for me, you'd probably ring up the supplier at this point and ask them what the hell they're doing. So there's the three examples. We're happy to show, lots of other examples as well. But in summary, kind of what I wanted to get across today is that statementmatching.com can automate the matching to help you find the exceptions quickly. If you put all of your statements through it, you need, never miss an invoice or a credit again. It gives you another opportunity to spot duplicates, with your unpaid invoices that are on the system, not on the statement. And I think it's a, real improvement in service to the suppliers. And it's a way of, keeping on top of slack suppliers as well, because I've seen it lots of times where you've even got a credit on the system and the supplier, doesn't put it on the statement. So you kind of, you can catch them out as well. And the, add-on effects of reducing phone calls into AP and avoiding escheatment. And, thanks for listening, and do contact statementmatching.com about a free trial if you want to give it a go.
Thank you, Daniel. If participants viewing this webinar have any questions, please email webinars@ifm.com. That's time we have for today's program. Thank you to our speakers, David and Daniel. This webinar was brought to you by the Accounts Payable Network and sponsored by statementmatching.com. Thank you.